Hi everyone, welcome to another honeystocks.com stock market outlook. This one's going to be going out on the 28th of August 2021. Now, of course, the market over the last week has been incredible. I hope you have done very, very well out there. I've had a lot of messages as usual, a lot of emails regarding individual names that I have covered in the last few weeks. And I have, of course, more stocks, more market analysis. What can we expect going into September? And what does seasonality look like at this time? And what names look like they might head a little bit higher. Now, a couple of things to get out there just straight off the bat. Those of you that follow me know this already, but I am not a day trader. I'm not in this for $1 or $2 moves. I'm in this for $20, $30, $50, $500 moves. I'm primarily a trend follower. I'm looking for uptrends in the market. You will realize very, very quickly when I start to walk through some of the charts for the individual names that I have a bit of a mix of styles. I'm looking for range bound names. I'm looking for stocks that are also bottoming. I'm not restricted to breakouts like a lot of analysts out there. So hopefully you get some value from this, and if you do get some value, please, as always, feel free to like, share, subscribe to the channel. Try to upload every few weeks. The eagle-eyed amongst you will realise that I have been on a bit of a social media rampage over the last month, but that will be coming to an end shortly. I'm just way too busy now, yeah, so let's dive into the charts. Let's see what the market's telling us, and let's see what we can expect going into September. Now, before I get into this, as always, please pause the video. Make sure you're comfortable with that. Basically just says there's not any investment advice, and please do all your own due diligence. Maybe to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for in professional circles, and I hope you get some value from this. And if you do, please do like, share, subscribe, all the good stuff. Now, what I will do is probably just spend, I think, 2-3 minutes here just walking through the broader market, how the market as a whole structurally is holding up, as well as walk through some of the seasonal trends that we tend to see in September. Now, as most of you who follow me know, the S&P 500 chart has been my chart for months. We reached my upside objective in the S&P 500 around 4,400. Now, we have broken out above the next Fibonacci level. So the hope is that the market continues to move higher from these levels. There are some things that I look for in order to get defensive, and I think if we start to break down below these key levels, that would be a big problem for me. If we look at the SPY and we break it down to a daily time frame, now what this chart is showing is the percentage of stocks that are trading above their 50 period simple moving average. It's a very common breadth indicator. It just lets us look at the internals of the market just to see how healthy the market is. And again, this has been my chart for months. Basically, what I look at is when we get a deterioration of breadth, yes, we understand that the market under the surface is looking like it's under a little bit of pressure, but when we have the deterioration in breadth, we always get the expansion of breadth, and that's exactly what the chart is showing. And I think when everybody was having a meltdown, over the last couple of months, looking at the internals, looking at breadth indicators, something that I understand is that when we have a rampant bull market, and make no mistake about it, we are in a rampant bull market at the moment. When we get the deterioration, it's always followed by expansion. And rather than get defensive and move into defensive assets, perhaps, like the bonds, the yen, etc., what really the easier play is to find the stocks that are still going up and not the ones that are going down. And that's just common sense to me. Now, We've got the Dow Jones Industrial Average. Again, it's close to breaking out to new all-time highs. We have had a massive breakout in technology this week. We've got the small caps. Congrats to anybody that has bought in on the small caps at the lower end of the range. But it does look like the Russell 2000 is now making its way to the upper end of the range as expected. I posted this chart to social media a few weeks ago, just highlighting that this is textbook technical analysis. We have an uptrend, consolidation, and then of course we've broken out. We would expect another uptrend in the equally weighted S&P 500. We add in a breakout for the NASDAQ. We add in a breakout for the growth names. The market looks pretty healthy to me. Now, I know there's some of you out there that will be saying to yourself, well, the market's at all-time highs, Sam, we have to expect a pullback. And I think, that's a completely valid way to look at things. But in order for me to start to think about getting defensive, price and the market has to tell me to get defensive. I'm not seeing that at the moment. If we look at the growth versus value chart, now what this chart is essentially saying is that if we're above this level in this ratio, which we are at the moment, then growth is perhaps outperforming value. But one thing that I also understand is that when you compare this ratio, it is chopping about sideways at the moment. So that really tells me that growth and value are going up together. So, there is this fixation, I think, with many that are looking for the growth names, and, that's all good and well, but it doesn't mean that you should neglect a lot of the value names. I mean, you just need to look at what happened with energy this week. Some of those value names have ripped 10-15% in a few days. So there is a little bit of a balance to be had, in my opinion. But I think the thing that I've got my eye on at the moment is the seasonal trend that we have with September. Now, when we compare September, now this is the average monthly performance of the S&P 500 going back over 70 years. You would have to be negligent if you didn't take this information and factor it into how you approach the month of September. So while we are in a rampant bull market, yes, we have all the bullish charts. My job is incredibly easy when the market's going up. But I think where professional analysts look at things is, well, what if the market isn't as healthy? What would the market look like in an environment where we have to start thinking about perhaps tightening stop losses, perhaps preserving profits and maybe taking some risk off the table? So every single September I start to kind of build and formulate a game plan, and I would highly encourage everybody watching to have some kind of game plan in case we do start to see these levels break down in the major averages. It would likely be a bit of a problem. So disclaimer, I'm about to walk through around 25 individual charts, but what I will say is that my thesis is valid and could change on 30 seconds notice. That's the stock market for you, so please do your own due diligence. I like a lot of the charts. There's a lot of targets that I have on a lot of popular names, a lot of the names that I've been asked about in the last few weeks. But if the market decides to switch gear and we get a brutal September, a lot of these charts will no longer be valid, and the thesis that I have could potentially not be there. But seasonal trends are exactly that. They're just seasonal. It's not a guarantee that September is going to decline. It just means it's something that you should be aware of. September could absolutely rip higher. That's my hope. But to the other end, it's something to be aware of. Now, that leads me on to, as I said, some names that I like. Now, Broadcom report earnings on Thursday. Now, as we can see, this is a textbook sideways range. I would hope that most of you who know anything about technical analysis understand that range-bound plays are essentially the easiest. I think if you're looking to maybe swing trade, you just buy it at the bottom and you sell it at the top. But it does look like we're potentially breaking out of this range now. I am highlighting here the $500 round number. A lot of you won't give any consideration, I think, to the psychological levels in the market. The round number concept is very, very real. We get it at $10, $50, $100, $1,000. So for me, Broadcom needs to clear $500, and I would be considering this one post earnings. I don't like to buy in the run up to earnings. I don't like to take that gamble. I like to have at least 10% profit in place in order to hold through earnings also. So I think Broadcom makes a lot of sense. Speaking of the $500 round number barrier, of course, Moderna, it's a name that I get asked about constantly. I did cover this one back in June when we had this breakout, and it's been incredible. This RSI level is a very significant level for this particular stock. I would hope that most of you who do use technical analysis would have factored in $500 and the RSI levels into your management of the position, but I think we've had a very healthy pullback. I do see Moderna going much, much higher over time, but it does look like it's taken a little bit of a break at the moment. I think if it can stay above the 350 level, then that would be bullish in my view, but I think if you start to break below 350, that's likely a bit of a problem. We've got Match Group. I covered this one a few weeks ago, highlighting this as a probable support level for the stock. That's ultimately what we've seen. Again, I don't mind these range bound plays. They're very easy to define the risk, and ultimately there's an upper target there of around 172. Facebook looks like it's breaking out. As we can see, it looks to be a 50 period simple moving average uptrend. It has broken out above a key Fibonacci level at the 261.8% extension. We know with Fibonacci levels, they tend to move from one level to the next. And if Facebook does decide to go to the next level, that gives you a target up around $500. Square Inc. Waiting for a breakout here at 285. Now, for disclosure, this is a stock that has been recommended to our clients, members. I own a significant position in Square Inc. Again, textbook range bound play, buy at the bottom, sell at the top. I am still holding because I'm expecting it to break out, but I do have things in place like trailing stop losses, etc., to preserve my profits. I have a process in place that keeps me in a trade for longer, and it works for me. I would highly encourage anybody that's watching this that maybe doesn't have a process to build out a process that keeps you in a position to get the maximum from a trend. But I like it above 285. NVIDIA, again, disclosure, I own a significant position in NVIDIA. It has been recommended to our clients and members over the last few weeks, and it has broken out in the last week on the back of very positive earnings. Now, a couple of things to note: the RSI is not in an massively overbought condition, so there is room to run still with RSI. Yes, it does look a little bit like it's due a pullback, I get it, but the indicators tell me that this can still run. Even if it was to pull back, pullbacks and uptrends oftentimes offer opportunity. I'm sure many of you have heard me say that many times in the past. It has got excellent relative strength. This indicator, when it's rising, it means that it's outperforming the S&P 500. It's a useful little tool that I like. But again, the trailing stop is rising, and I'll see how far that one goes. But I like NVIDIA very, very much, especially given semiconductors are breaking out and look like they want to move to all-time highs. Lots of questions in the last couple of weeks on Airbnb. For those of you again that don't know, I have covered this, and as we can see, everyone knows how great of a company it is. International travel is now starting to move again. We have a rising 20-day simple moving average. It rallied off its lows, and it's pulled back to its 20-period simple moving average, and I like Airbnb very, very much. Sea Limited, earnings now out the way. In my opinion, it has broken out now above the $300 level. It is consolidating and it has been slowly, steadily rising over the last week. Lots of room for it to run with their RSI, and we have excellent relative strength compared to the broader market. Apple, we have recommended this again to clients and members for disclosure. I own a significant Apple position as well, and waiting for a breakout here above 150. Again, it would have to be quite negligent to not highlight, biggest stock in the world breaking out to all-time highs. That's ultimately what I hope and expect. But again, I've got trailing stop losses in place in case it doesn't. Got Applied Materials. Very, very similar looking chart to something like Lam Research. I like it above 146. Again, it's a bit of a range bound play at the moment, but it is only $10 away now from a significant level. I think if it can get above that level, then it would be pretty good news for that particular stock. I covered AMD a couple of weeks ago on this pullback, and my exact words were, as I just said a few moments ago, pullbacks and uptrends oftentimes offer opportunity. That's exactly what we've seen. It's pulled back to, let's call it the $100 level, although it's 102. I would just bracket that as the $100 level. RSI has pulled back. It's within a bullish range, and ultimately I would expect AMD to go a little bit higher here. XLNX, the bigger the base, the higher in space. Again, I like it very much. I think if there's follow through on this next week, then XLNX could look pretty decent. We've got ARK. Obviously, anti-Cathay is very well known. Range bound play at the moment, but for me, I think it's setting up and it's looking like it's a potential inverse head and shoulders pattern. So that would be highly bullish if it can get above this level around 132. CDNS, I covered this one a couple of weeks ago. RSI is a little bit overbought, but ultimately, given the strength of this trend, given the strength of the stock at the moment, again, I would expect a little bit of a pullback. RSI is at a level where you would expect a pullback, but again, I think a pullback there will offer opportunity on a great company. Salesforce, I've had a lot of private messages on this one. Not just from social media. I think my clients, members all like it very, very much. I covered this one a few weeks ago for them on a cup and handle breakout. Again, that's what we've seen. We've got positive earnings. It does look like it's pulling back potentially to fill that gap, which will offer opportunity. I think if there's a defined bounce from this level, I think that's a signal to probably go in, and I would have a 283 minimum target. I think everybody understands how great of a company Salesforce is. It's in the Dow for a reason, and I think if it can get above 283, that would be very, very good news for Salesforce. Again, another software company. We've got Crowdstrike. Again, breaking out to all-time highs. I believe they're being added to the NASDAQ. I think it was a comment from one of my clients during the week. I've not looked into that. I don't see any reason why it wouldn't be the case, but Crowdstrike is breaking out and looks bullish from my perspective. Datadog, another good company, rallied off its lows. Again, I would highly encourage anybody to just get a process that keeps you in a position for as long as the trend is going. But I've got an upper target here of 176. It is moving above the Fibonacci levels, and it does look like it's consolidating before another move higher. DR Horton, got a lot of messages on this one a few weeks ago because I posted a chart on the back of earnings when it was at the lower end of the range, and my exact words were, it just has the look of a stock that's building a base. Now that seems to be the case. That thesis is playing out, and there's a 107 target that I have. Docusign, For disclosure, I own a position in Docusign. I'm potentially looking to add to it if it can move above the $311 level on a breakout. Very pleasing for me that the 50 period simple moving average is acting as support. I did have concerns I would dump the position if we started to break lower here, but the 50 period moving average held up at the moment, and I hope to see it break out above 311. Cryptocurrency. My work's had a lot of attention over the last few months because of a few charts that I've put out for Ethereum. One, highlighting the lows here as a buy opportunity. Two, highlighting this breakout, and then highlighting this breakout as well. So Ethereum is doing exactly what is expected. Again, disclosure, I own plenty of Ethereum, and ultimately I've got a target here of 4,200. I don't see any reason why that wouldn't play out, but at the end of the day, I think if for me to dump my Ethereum position, I think you would probably have to start to break below these lows here around 2,800. But I like Ethereum a lot at the moment, and ultimately I hope to see it go to 4,200. We've got Google. Now, my upside objective on Google has now been met. Now, that doesn't mean that Google can't go higher. It absolutely can. The level here is 28.95. If we can get a breakout here again, then that's going to be very good news. It's very easy to define the risk as well. You would expect it to at least test $3,000 bucks. But if it can get above that $3,000 level, then the next logical target would be 4,600. But please be aware that when Google gets to these Fibonacci levels, although it looks like it's breezed through these levels no problem, this can be, this is a 6-month period, this is a 12-month period, again this is a 3-month period, so it can take a little bit of time to kind of work itself through, but of course the trend is there for everybody to see. We've got Home Depot, again remain bullish above 315. For those of you that like these range bound plays, I think there's a very simple thesis to build out there, and a 345 target. Keysight Technologies. Now, for disclosure, this was recommended to our clients last weekend on this breakout. This was the chart that was provided. They had earnings out the way, and the earnings numbers were positive. We had above average volume, excellent relative strength. So for those of you that have maybe missed this entry, I also actually covered this at 155 for our clients and members, but for those of you that like this, pullbacks and uptrends offer opportunity. I think a pullback entry would be logical given that RSI is a little bit overbought at the moment. LRCX, for those of you that follow me on social media, I posted this chart yesterday on Friday. Disclosure, this was recommended. That's the chart that was provided to clients and members. Range bound play. Ultimately, I see a 670 target on it. That's target 1 minimum. We've got Melee approaching a target level here at $2,000. MGNI again rallied off its lows, looking for a minimum target there of $38. I know that this is a growth company that many are very, very high on. I see a lot of comparisons, I think, with Trade Desk. And of course, I think if it can get out above $38, then that would be highly bullish. PLTR, again, I get a lot of messages on this one. Very, very simple chart for me to build out at the moment. It does look like it's a bit of an inverse head and shoulders pattern that's kind of setting up here, and I like it above $28. Snowflake, on the back of positive earnings, we had a massive buy signal here, and it got bought up. I think, just from what I understand from what my members were saying, was there was a bit of a hit piece on it. Ultimately, a lot of these hit pieces from renowned short sellers, most of the time they offer incredible opportunity for entry. That's exactly what's happened, and it's just ripped off those lows. Positive earnings,
As the chart can demonstrate, there's a very clear logical target one of 325 on it. Thermo Fisher is breaking out. I think provided it stays above the level here at 533, I think you have to be bullish on Thermo Fisher. Talking about Trade Desk a second ago, for me, very interesting that the 50 period simple moving average is acting as support. I think if it can break out above this level, above 82.50, then that would be a bullish development for the stock, and it could potentially move higher from those levels. Zim Integrated Shipping Services, recent positive earnings. Now, it's obviously been in a massive range for the last few weeks, months. I have covered this one numerous times. For those of you that maybe aren't aware, but obviously shipping services, they're making lots of money at the moment, and Zim Integrated Shipping Services posted good numbers. I think a lot of the shipping services names are doing very well at the moment. It does look like it's potentially about to break out of a range. It is struggling at the $50 round number level, but I think if you can get a move above the $50 level, again, it becomes very easy to manage risk, and ultimately that's what technical analysis helps you to do, is manage risk. So I think if it can get above $50, then that would be highly bullish. Zscaler, lots of messages on this one. I've covered this one for the last few months. Again, for disclosure, I own a significant Zscaler position. It's been recommended to clients and members on a breakout at 230. Bought it here. I've added to the position in the last week, and it's doing very well. Ultimately, I hope to see 250 hold as some kind of support for price. We've got RSI, which is in a bit of an overbought condition at the moment, so we can reasonably expect a pullback. Doesn't mean you should dump your position. It just means just to be aware, and it might, if you like to add on pullbacks rather than breakouts, it might offer opportunity to add to an existing position. And again, another chart that I've posted to social media yesterday. I like Cloudflare above 129. Again, we recommended this one to clients and members back on the 7th of June with an alert on this breakout here. It's been consolidating. It's offered opportunity a couple of times to maybe add to a position, and I think if it can get above 129, it's potentially another opportunity to add to a winning position if that's what you ultimately like to do. But I think if you're somebody out there that gets value from technical analysis, feel free to stick around for a minute or two. But if you've got some value from that, again, please do subscribe to the channel, give it a like, share it on social media, share it with your followers. It all helps to get the word out there, and get my work, I guess, wider known. But if you are somebody who maybe struggles a little bit with technical analysis, feel free to go and jump on to our website at honeystocks.com. We provide technical charting research, and of course we have various membership options. But just to kind of give you a very quick overview of what we provide. We provide a premium weekend analysis every week to our clients and members, similar to what you've just watched, but with premium charts and a lot less talking. We also provide our trade ideas, which I'll show you what that looks like in just a second. We provide a halftime analysis every Wednesday, again with premium charts, and an update midweek. We provide access to an incredible investing and trading community. We've got hundreds of members from all over the world. We're not a day trading community. There's no day trading. It's a very smart, very intellectual bunch. So I think if you're somebody that likes good insight, logical insight, it's probably a good place. I provide charting support on day-to-day basis, and if you're somebody that wants to learn technical analysis, I've built out an incredibly comprehensive education program. So if you want to learn technical analysis, you will have access to that program with all membership levels. And if you want to take it a step further and go and have a look, I've just released this week the analysis that was provided to our clients and members before the market crashed last year, and I think it will give you a very comprehensive overview of the work that I put out there and why it's so highly thought of in professional circles, and of course from our clients and members. So feel free to go and check that out. But this is what our trade ideas look like. This is the alert that I mentioned a minute ago for Cloudflare. We've got Square Inc., which was sent out, again, range bound. We've got Zscaler above 233. Lamb Research was sent out this week. That's obviously ripped 5-6% in the last couple of days. Antero Resources ended up being a 50% plus winner, and last year Plug Power 400% plus from that move. But I'm very, very unique in what I do. I don't know anybody else in professional circles that even does this, but I log every single trade idea that I've ever put out to our clients and members over the last 4 years. So feel free to go and check to see whether the types of stocks that are recommended are the types of stocks that you like to buy. We're not recommending penny stocks or high risk names. We like quality stocks, quality names, growth, value. It's all there, but go and have a look at that, because I wish this was the industry default. The numbers and the charts and the alerts that I've put out are ridiculous. So go and do some due diligence there. But everything's been logged over the last 4 years, and if you're a professional out there and you're coming across my work, I know there's many of you that follow my work, start upping your transparency with your work. It would be much appreciated. Now, some of the testimonials we have, recent, membership renewal. Your guidance has made my year, not only because of the returns, but the education as well. Count me in, that's a membership annual renewal. We've got Vince, second year in a row. Trading account is up over 100% for the year. This is the equity curve for another one of our members. Got the benchmark of the S&P 500, and this is our members' equity curve, obviously outperforming the broader market. Again, another membership renewal this week. Survival Trips, thanks for all the trades, and that's a 12-month membership. So I think that there's a lot to be said, and I think when you look at the individual quality of, I think the insight that's shared, I mean, this is, you would probably need to pause the video here, but this is Joe providing a comprehensive list of stocks that are breaking out, major sectors, etc. Obviously, I think we're all very, very happy at NVIDIA here, but certainly, there's a lot there. Again, trading portfolio up big. Got anxiety that they're going to lose the gains. Got one of our members there going from 100k to 160k. So go and do your due diligence. Figure out if my work is a good fit for you. But I think if you're looking to get away from day trading, I think if you're maybe looking to learn technical analysis, maybe you're too busy to filter through thousands of stocks. Maybe you want to be part of a successful community. Maybe you appreciate clean charting, etc. My work might be a good fit for you, but like I said, go and jump onto our website, figure out if it's a good fit for you, and if it is, then hopefully I can welcome you soon. But if you've stuck around to the end, thank you very, very much for watching, and enjoy your weekend. Thanks as always.